Hey there, this is Sean Mullaney, financial planner. It's time again to talk about year-end tax planning. So I'm recording this for the Thanksgiving weekend edition of my YouTube channel. And I've done a blog post on fitaxguy.com. I'll link to it in the description below, where I talk about some of the main tax planning points for the end of the 2022 year. And let's just scroll through this. I mean, to my mind, in terms of, hey, what's sort of unique for the 2022 tax year, I think it's tax loss harvesting, right? This year, lots of folks out there, unfortunately, got losses in their portfolio. They got losses, in those taxable assets and perhaps in a taxable bond fund, right? That could be a real opportunity for some great tax loss harvesting. Got to be done by December 31st. But what you could do is trip a loss on your tax return by selling a built-in loss asset. That's great. And then maybe you reallocate so that maybe your taxable accounts have more lower yielding things like equities. And then maybe in, say, a traditional 401k, you got a little bit more in bonds, and you've done two things by doing that. One, you've harvested a tax loss, and then two, you have gotten your tax basketing better because you've located bonds, which tend to be higher yielding, don't tend to qualify for any sort of preferential rates in maybe traditional deferred tax accounts. Another thing to think about this year is crypto, right? For those who hold crypto and want to hold crypto, you might want to go through before December 31st and say, hey, do I have some losses in my crypto portfolio? One of the nice things about crypto and tax loss harvesting is crypto is not subject to the wash sale rule. So that's very important to keep in mind, right? You can sell a crypto and then a day or two later buy it back, and you still get to harvest that loss on your tax return. So there has been a proposal in the past to get rid of that, but we'll see if that goes anywhere. One thing to be thinking about for year-end tax planning, if you're a solopreneur, is some year-end retirement savings planning. This could yield a big tax deduction, or maybe get a bunch of money into a Roth solo 401k. To get the most bang for the buck for most people, you got to get that solo 401k established before December 31st, and you do not want to be calling on December 30th. I'm going to tell you right now, not happening, right? I would do this well before Christmas. Look, anything's possible, at least in theory, but in practice, my experience has been you want to get that solo 401k established well before December 31st. I mean, you could always try. If you find this video on December 30th, it's worth a phone call to your favorite financial institution, but you really want to make sure that thing's established, in the early part of December at the latest, if you can. And then you got to think about funding, right? And for Schedule C, the funding's a little weird because the employer funding, that contribution can happen next year. You can do it before the tax return filing deadline. On the employee side, it's a little different. You either got to get it funded this year, or you can make an election to fund it by December 31st, save that in your permanent tax records, and then what you could do is, as long as the sole 401k is established by December 31st and you got that election on file, you can then fund it by the tax return deadline. Roth conversions and tax gain harvesting. This is really mostly for the early retiree, but not exclusively. Some later retirees can take advantage of this. Maybe some self-employed on the Roth conversion side, not really on the tax gain harvesting in many cases. But maybe, hey, you didn't make as much this year. Maybe you're in a 0% capital gains rate. Even if you got a W-2, you're self-employed, tax gain harvesting, right? So again, this is December 31st planning, but you probably want to be out in front of it. You don't want to be calling the financial institution on December 30th. We got some funding deadlines. HSA funding deadline is April 18th. There's some sort of holiday, I think in Washington, D.C. or something that moves it off. I think it was going to be April 17th because of a weekend. And then they're like, oh, there's this holiday in D.C. So everybody's deadline gets extended one more day. So it's April 18th for the HSA. You're going to want to look into doing that through payroll withholding, which is generally December 31st. And then the Roth contribution deadline for this year is also April 18th, 2023. Backdoor Roth IRA. People love to think about, hey, what's the deadline for the Backdoor Roth IRA? And the answer is there is no deadline, right? There's no IRS publication. There's no regulation. There's no statute that says this is the deadline for the Backdoor Roth IRA. As a practical matter, I think you should be thinking about two things. One, there is one deadline here, and that's the deadline to do the 2022 traditional non-deductible IRA contribution. That must happen by by April 18, 2023. So that deadline is there. In terms of that second step, the Roth conversion step, that there really isn't much of a deadline in there. Generally, people like to do it somewhat soon in time. You don't have to, I like to say wait till the next month, but if you wait 2 months, 3 months, no big deal. I like to do it relatively soon in time, so we don't have much growth in the traditional IRA that could then be taxed when we do the Roth conversion step. The compliance in the 8606s gets a little complicated if we do a backdoor Roth and we're after year end. So what you might want to do is check out this blog post, this split year backdoor Roth IRA. I think it's actually a unique blog post in that a lot of other commentators just haven't gotten around to commenting on the tax compliance stuff when we don't do sort of the plain vanilla backdoor Roth IRA. Hey, January do the contribution, February we do the Roth conversion, and we're just done for the year. We got 10 and a half more months. When we do it in the sort of going into the next year, the compliance, the 8606 or 8606s can get a little more complicated. And then the last thing is, if we've done any sort of backdoor Roth IRA during this tax year, the big date to consider is this December 31st. I've got a post here on the backdoor Roth IRA and New Year's Eve, right? It turns out New Year's Eve is actually the pro rata rule day. I don't know why Hallmark doesn't acknowledge that. Maybe next year you can get a pro rata day card. But if you've done that backdoor Roth IRA, but well before December 31st, just make sure you got nothing in traditional IRAs, SEP IRAs, simple IRAs. I will say it does happen where, I rolled over an old 401k into a traditional IRA after I did the backdoor Roth, and now I'm stuck. It's not the end of the world. But you might have a situation where, I actually have an old traditional IRA. I'd forgotten about that. Maybe, well before December 31st, you could take some action to do a direct trustee to trustee transfer of a existing traditional IRA into a workplace 401k. Again, that's an educational point. You got to look at your own circumstances, but it's at least something to think about. And then charitable contributions. This one's a good one if you are thinking about some year-end planning. Maybe, I can now itemize instead of taking the standard deduction if I do something through a donor advised fund. If you got some built-in gain assets, they still exist in late 2022. You might want to think about donating built-in gain assets to a donor advised fund instead of cash, because maybe we can get a capital gain out of taxation and get our juicy tax deduction. Again, this is another one where I saw this recently on Vanguard's website. If you're using a paper form to do a donor advised fund contribution, if memory serves correctly, that needs to be done by December 16th with Vanguard with the paper form. Their website, as of my last reading of it, indicated that you could still do it up to December 31st if you could do an electronic transfer. I suspect that's going to be easiest and maybe exclusively through a transfer of Vanguard assets, but I don't know that for sure. So if Vanguard is your particular institution, look into that. Other institutions are going to have similar type things, I would anticipate. But again, this is institution by institution. So, don't take my video for it. Just understand that, if you're doing this on December 30th, it may not get done. And then RMDs. You got to take that RMD by December 31st. To make sure you avoid that 50% penalty. Nobody wants to be dealing with that. So let's just get those taken care of by December 31st. Now, I also have a recent blog. Is this actually a YouTube video, I think? I've got a video. I'll link to it above here where I talk about, hey, for some people who inherited retirement accounts in 2020 and 2021, the IRS has waived the 2022 RMD, but you still might want to do some tax planning. So that's something to think about. And that is a YouTube video I will, like I said, I will link to in the show notes and above. And so those are the big ticket items. There are other things to think about at year end. I think the best tax planning is sort of global. It's not really year end, but that said, there absolutely can be benefits from doing some year end tax planning. So you ought to think about it. Hope you enjoyed this video. If you did, please mash that like button and subscribe to my channel. I'll see you next time.